So we're almost at the close of 2025, and it already seems like we've dived headlong into 2026 with Elon's companies. All eyes are on the upcoming SpaceX IPO, and all sorts of ideas are being floated on how SpaceX should enter the market and even reward long-term Tesla shareholders. So who better to talk to than Larry Goldberg? Larry is a serial entrepreneur, co-inventor, and author, and managing partner of Lumoscenti. He's one of the most experienced and trusted voices in the Musconomy community, and as an investor in SpaceX and Tesla and a longtime believer in Elon and his companies, he has some really interesting ideas, some of which we've discussed here on Over the Horizon, including how Tesla should become the mothership of the Musconomy moving forward. So with that, welcome, Larry. It's great to have you back.
It's been great to be here.
All right, so there's so much to talk about, but I think we should kind of begin in Delaware, right? There's still an overhang that people still haven't understood. We still need to continue to insulate Elon and his companies from Delaware's courts.
Absolutely. It's vital. You know, the dangers in Delaware are not well understood. People think, oh, well, Elon won the last round and the final round of the pay
CEO compensation.
Yeah. And it's just not true. While he got his package reinstated, which was, after all, crucial to the whole case, nonetheless, the Supreme Court did not reverse the finding of the chancellor's finding that the board were not independent and they did not make an appropriate set of disclosures, and that because of that insufficient disclosure and lack of independence, the award was not legal. The award of the awards of the pay package were not legal. The only thing the Supreme Court said is you can't reverse it because you cannot restore Elon and the shareholders back to the position that they were in. It's impossible because Elon worked for X number of years. I think it was 5 years or 6 years at no pay. And so there's no way to put everybody back to the position they're in, and therefore you can't make a change. And that was the ultimate finding. But they did award the attorneys for the complainant. They awarded them 4 times the standard rate for the number of hours they said they billed. Now, it may not be clear to everybody that is an incredibly high award. It turned out to be about 37 million or something in that range of dollars, but that's not the issue. The issue is that a 4 times lodestar just means the standard rate, 4 times the standard rate for an award to attorneys is an absolute, it's at the top of where, say, a federal case is. Very, very few, like less than 10% of federal cases ever get awarded 4 times, 4 times lodestar, 4 times the standard rate. Generally, it's about 1.5 to 2.5 times the standard rate you get in a federal case. And in Delaware, the standard award used to be around the same level as the federal cases until this current chancellor, the head of the Court of Chancery, the head of the court that takes these cases in Delaware, these business cases, until she came on to the court, and there was one other vice chancellor who was on the court who was very similar. those two between them have been the cause of this constant increase of awards to lawyers. So bottom line is there is a target on Elon's back
Yeah.
in Delaware because lawyers now understand that any case they can manufacture against Elon, they will have a sympathetic ear
Yeah.
from the court, and that the lawyers will have a really good chance of earning some good dollars. So when you start a complex transaction in the state of Delaware with Elon Musk, you're almost guaranteed a good reward
Yeah.
as an attorney.
Yeah. Irrespective of the merits of the case.
It appears so. I mean, the merits of the case here were actually found to be okay by the Supreme Court.
By the Supreme Court. Yeah. That's the irony. That's
and
yet.
Here's the thing. The defense attorneys, the defense lawyers were brilliant.
Yeah.
Because they realized that they were fighting against thunder, to use a crude expression. They realized there was very little that they were going to do that were going to reverse the view that, Elon was in control and that it was a bad thing that they did because it was Elon. So what they said to the court is, look, even if you find her correct on the merits of the case, you can't return everybody back to the original situation. Therefore, you've got to you've got to actually not penalize Elon, because he really worked for 6 years and did a magnificent job. And so there's no way you can say what he should have been awarded at that point. So they were brilliant. They understood the problem and they worked around the problem. But that points to the size of the problem. That even if Elon acts 100% according to the law, he's going to not win in Delaware.
Yeah.
So the last thing you want to do is involve any of Elon's companies in any transaction that is remotely related to Delaware.
Yeah. So this is signposting what I want to talk to you about, Bill Ackman's proposition of a SPARC. But before that, I want to ask you some very basic, simple questions that I think have not been addressed properly. And I think you're extremely well placed to explain the complexities. So the first is, why is it so difficult to take a company public, and how complex is it really to take a company like SpaceX public?
Well, firstly, there is in the United States today, and this is true in most of the Western world, and it's become true even in China, there is a body of law and practice around taking public money to finance companies at an equity level. And, you need specialist lawyers, and most of all, you need specialist bankers, because what you're trying to do is you're trying to take a company that is private and that is protected as a private company that has a relatively limited number of shareholders, a relatively limited capital base, and you're going to take public funds from private people, from pension funds, and you're going to take that money and you're going to take it for shares in this private company. And so this body of law that has been built around protecting those private shareholders from making this investment requires an immense amount of disclosure, requires immense amount of compliance to multiple levels of law from various bodies. and various government regulators, banking regulators, and from the banks themselves. And the banks, of course, are very exposed because they put their stamp, their imprimatur on that project and that transaction, and therefore, if anything goes wrong, they've got the big money. The public and the regulators will look to them as much as they look to the company and the directors of the company. So it's really by way of protecting the public, and on top of that, protecting the good name of the process by which companies go public in this country. The United States has the deepest and broadest public markets, capital markets of any country in the world. It's one of the primary strengths of the United States. It is what really defines the United States as the center of the capitalist world. And so the protection of the integrity of those markets is really central to this whole process of going public.
And then for SpaceX, because of the nature of the company, because of where it is placed in terms of American strategic interests, there are added complexities. How does that impact SpaceX the process of taking SpaceX public?
Well, there are a lot of factors there. The first is it's an Elon company. I don't think anybody gets the public attention quite as readily as the name Elon Musk. He's loved and he's hated, and he's also followed by a huge number of people globally. So any company of his is going to get some sort of orders of magnitude greater focus, and it's the press, it's the competitors, it's the government bodies, it's the regulators, and it's not just the regulators in the United States. The regulators in Europe have become very fond of regulating Elon Musk because, it's a pot of gold to them. They love to make money out of, Elon. Basically, Elon Musk has really devastated their auto industry. He has devastated their space industry. I mean, Europe used to laugh at the US space industry. No longer. So the name Musk attached to SpaceX is a key driver, but there are other primary drivers. The one is SpaceX is easily the most powerful space organization in the world, and I include in that all government bodies, including NASA and including, ESA, the European Space Agency, and including, the Russian Roscosmos, and including the Chinese. And so the focus on them is tremendous from so many different angles. And then the other thing is they are at the bleeding edge by far, far out there in terms of their ability to launch and their focus on the future. They're trying to do something which no other company has ever done, and that is being able to launch and return in full the launch vehicle that takes satellites to space. So it's called, rapid and complete reusability of the launch vehicle. So for all those reasons, it's central. And then the other issue is it's the largest private company in the world in terms of capitalization, capital value. Not necessarily in terms of revenue, but certainly in terms of capitalization. I mean, it's worth, by all measures, it's worth, around $800 billion. That's Quite a lot for
most of the value is potential value, right?
like all Musk companies, all the value, I mean, 80% of the value lies in the future. Now, in SpaceX, they've turned very profitable because of Starlink.
Correct.
Starlink is their global satellite communication satellite network.
I think they're about to hit 10 million subscribers.
Yeah,
which is
10 million
crazy
subscribers and they're about to hit 10,000 satellites, and they have about 10 million subscribers. Yeah. It's a big number. They're becoming one of the largest, they're certainly the largest satellite communications company in the world. They're about to become one of the larger communication companies in the world, because once they start launching their new satellites, which will start launching the Starlink, which we'll talk about, they will be able to do a lot more in the world of direct to cell, which means when they start launching those, they will start offering a service that allows you to use your phone directly to the satellite for voice and data.
Yeah.
And when that happens,
anywhere in the world.
when that happens, that changes everything. Because suddenly the cell companies all around the world face real competition at, very, very difficult levels of competition. And it's going to be, country by country, because it's going to be very difficult for many countries to allow Starlink to do direct to cell in their country, because there are so many countries where there are monopolies, state-supported monopolies. Anyway, but that's a minor issue. I think we're going to see the growth of Starlink really take off. And the world thinks that, the financial world thinks that. Although Kuiper will, not Kuiper, now it's called, I forget what they've renamed it. I mean, this is the Amazon service.
The Amazon service, yeah.
It's going to be real. It's going to be real.
Mm-hmm.
It's not yet real or anything close to real.
So Starlink is just one part of that, right? And even direct to cell and the global internet right now, the promise of direct to cell globally, that's again another part of it. And then you have data centers, but then you also have the future potential, at least by 2030. Elon's talked about building Moonbase Alpha. He's talked about launches to Mars by 2035, 2040. You could see a base on Mars. So SpaceX, like Tesla, is so many different companies within the larger company, right?
Yeah.
How do you begin to price such a company at an IPO? What process or what model do you adopt?
All pricing is not done by doing models of future revenue. All pricing is done as what a willing seller is prepared to pay a willing buyer, and what a willing buyer is prepared to accept from a willing payer.
Right.
That has never been more true than in Elon's companies, and certainly of his public company, Tesla. If you value Tesla as an auto company today, what will you come up with? $80 a share, $30 a share, $100 a share, something that is a fraction of the current price of the share. Now, you also have to value the energy company within Tesla, and you have to, but those are really the minor issues of how you value Tesla. The bigger issue is, how do you value the potential of their robotaxi business? How do you value the potential of the cybercab vehicle? How do you value the potential, of their AI business, of their robotics business? So it's exactly the same with SpaceX. So if you think about Tesla at, what is it today, 400 and plenty, almost 500. I don't track the day-to-day stock. Randy keeps reminding me, what the stock price is, but I don't really track it. But if you look at the stock,
468 right now.
thank you. So now Royden has become my advisor. I mean, my informant. So at 400 and plenty, about 400 of it is valuing a future business in the robotaxi world and in the Optimus world, and possibly, the future of the energy and auto industry within those realms. And then something is being thought of in terms of something to do with data centers in the sky.
Yeah.
And something
and
to do, I was going to say, something to do with the terafab, and something to do with energy in the sky, and who knows how many somethings. There's a secret component there, and it's called Musk.
Yeah.
So if you value the auto company at, say, $80 a share, we're saying that somewhere between 5 times and 7 times the intrinsic value of the stock is the Musk factor. Well, apply that to SpaceX, and I have no idea where you get to in valuation. So it's a question of willing buyer and willing seller. And I will tell you.
So right now, and you're an investor in SpaceX, right? So
now, I'm not a direct investor. So just to be clear, I'm not a direct investor in SpaceX shares. I'm an investor in 3 separate special purpose vehicles, SPVs, that directly own, at least 2 of them directly own. One of them actually owns less than directly SpaceX stock. And I also am an investor in some funds that own Tesla stock, but that's like 10 or 20% of their value of this. So directly and more indirectly, but directly and indirectly, I own Tesla stock. I own an investment. I have an investment in SpaceX.
Right.
And quite a lot. It may be my biggest single position right now.
Oh, really? Okay. I thought it would have been Tesla, but okay, that's interesting.
It's definitely overtaken Tesla.
Wow. Okay, so is that because of the valuation of SpaceX in the private market right now? It's about $420 or $25 a share?
Yeah. I mean, my investments were everything from 25 to $180 a share. So, yeah, in that range.
Well, that's an astute investment. So then, as you said, the pricing of the IPO is totally dependent on how much someone is willing to pay for those shares.
That's right. And if I were to take a guess, a wild stab at a valuation, I think they could achieve the value of somewhere between $1.2 and $1.5 trillion.
Okay. Of course, there are higher numbers that have been thrown out there: 1.5 trillion, 1.7. Okay, so
Well, I went from 1.2 to 1.5. 1.5, I think, is at the high level. I mean, anything can happen, and we don't know what the conditions are going to be mid of next year. It's a very volatile market.
Yeah. And okay, so you're still expecting it around the mid of next year?
I am not a prophet on timing. Elon hasn't said. The popular opinion is that it's going to be mid of next year.
Okay.
What
do you think personally?
I think everything turns on the success of the launch, on the next couple of launches of Starship. Yeah, I think when Starship is declared to be production ready, production proven, I think the valuation jumps to that range because Starship is really a game changer.
Yeah.
And we want to see the ability to return. And by the way, for Starship to be successful, it's not vital that the ship be recoverable.
Right.
Or recoverable and reusable.
Yeah.
It's not vital. What is vital is that we have already proven at least version 1 of the booster is recoverable and reusable. Not necessarily rapidly reusable, but reusable. That is sufficient. What we need to do is see that the ship can go into orbit, successfully orbit and successfully lift, however many Starlink terminals that they're destined to lift. And I think it was 24. Probably 24. But that's, to me, the critical test. Once Starship is proven to be production ready, and I think we'll get there by the middle of next year, then I think the valuation of 1.5 trillion is justifiable and defensible.
Okay. Of course, we've seen Elon comment about the cadence of testing and launches.
Yes.
We're expecting it to be a lot higher in 2026 than it was in 2025. I think much of the political problems and the bureaucratic problems would have been ironed out by now.
I don't think the problems of launch cadence were bureaucratic. They had, at the margins, they may have impacted the cadence. What was crucial to the cadence was production capacity. They were manufacturing these things by hand in tents. And then they were using, very limited space in a very limited size of factory and a very limited size of high bay. Well, they now have a huge factory. And while they still have limitations in the high bay, by mid of this year, they're going to have an ultra high bay. And you're going to see production ramp very dramatically. Once they've proven this version, and I think they're probably close, I think they're comfortable that they'll get there early in the year. But once they prove the design and they dial in the design and they get 1 or 2 good launches behind them and 1 or 2 ships into orbit, I think you'll see production go into high gear. And by the end of this year, early next year, they will have 2 factories, massive factories and massive high bays in production. And you're going to see 3 ships a month.
Oh, okay.
At the minimum. You want to calculate the value of 3 ships launch capacity a month, then suddenly the launch business is making money. But when you think about the bandwidth you can lift at that level of, it's just staggering. So growth goes into high gear.
Yeah, I also think, and we're looking at the PEZ launcher of the dummy Starlink satellites that were launched in the last, that was IFT 11, I think.
Yeah.
So the proof of concept is there. They've launched it, whatever problems they had with the opening and closing of the bay door, whatever problems that they had with the Space Raptor, pretty much all of that has been ironed out with the last few launches. And now we're looking at the Raptor version 3. We're looking at the next version of Starship. So there's a lot of iteration that's gone on. And it seems that the next...
And still to come.
Still to come. Okay.
They haven't dialed in the design of the booster yet. The first booster at testing exploded.
Yeah.
We don't know the cause yet. It seems to have been a COPV. That's one of these compressed gas cylinders. They carry many of them. That's how they use. That's how they. That's kind of the driving force of many of the controls of the vehicle. So it's very critical. You know, they lost a Falcon 9 early in the Falcon 9 development due to COPV. Yeah. So a lot of problems. Yeah.
Mm-hmm. Mm-hmm. So you're expecting all of this to be in place and production ready by the middle, or at least April, in order to facilitate an IPO by the middle of next year, as the general consensus is. But let's also look at the other next steps. What do you think overall the next steps are, the factors that will determine the opportune timing and the circumstances for the IPO?
Elon has to pick a banker.
Mm-hmm.
If he's going to pick a banker and not go, the route that, that's been discussed at length, and we'll talk about that, I'm sure. That's Bill Ackman SPARC idea. I suppose, and everybody assumes it's going to be Morgan Stanley. I think JP Morgan are going to put in a good bid. Mm-hmm. They're going to have to pay to play. Yeah. So he's going to have to choose a banker. The banker is going to have to choose a team. The team is going to have to choose multiple supporting bankers. So that's a lot of water that'll have to flow under the bridge, because when Elon chooses a banker, the banker's going to have to get Elon to agree to the whole team and the supporting team. And it's not just Elon, it's Elon's team. Look, the SpaceX team is very sophisticated. They've built one of the biggest, share trading transaction desks in the world, private trading transaction desks in the world. They are very, very experienced at it, and they're very they've done an incredible job at both funding SpaceX activities, capital activities, and also managing the employees' share sales. And they've never disappointed their employees, and they've certainly formed great relationships with all of their investors. And so they're highly respected in the financial world, highly respected. And so they're very sophisticated, and I think Elon can really turn to them. I think Gwynne Shotwell, I think she's about 60 years of age now. I think she'll have to make a decision. Is she going to stay another 4 or 5 years? Yeah, I mean, everybody is high, speaks very highly of her. But there's depth in management there. Yeah. And there's been a great deal of stability in management there in the last 5 years. So that needs just to be cemented. So all of that has to be done. And they have to do their financials. They have to have their business plan well cemented, because they need to talk about that in any prospectus they issue. They're going to have to tell us what their plans are. They're going to tell us what they're going to be doing. They have to give us some insight into what the company is going to look like over time. Famously, Elon gives very little future, insights. At Tesla, for example, he talks at very high level, product level, conceptual ideas, but financials, not as much. So we assume we're going to get the same from SpaceX, and then the question is how you price that stock. So a lot of technical work to be done between now and then, a lot.
Yeah. If I were to ask you to take a gander, and the current price is about, 420 at a 1.2 trillion valuation. First of all, what the shares that will be offered in the IPO, what shares are they going to be, and where are they coming from? If you could just give us your thoughts on that. Are they going to be bought back because there's talk of SpaceX offering a $2 billion kind of a buyback in the run-up to this IPO? Are those shares going to be then kind of offered in the IPO? What is it going to be like?
Highly unlikely. It's highly unlikely that they will not issue new stock.
Okay.
I think that is highly unlikely. I just don't think there's enough to buy back, even at the price that we're talking about, to raise, $80 billion and to achieve a, the kind of valuation that they're talking about. I may be wrong. I mean, as I've said again and again, I'm not on the cap table, and so I haven't had these disclosures. I read the same things you read. But I think there's going to be an issue of shares,
Mm-hmm.
And I think that at a $1.2 to $1.5 trillion issue, they'll want to issue stock that sells for something reasonable. What is reasonable? $50 stock, $100 stock, $150 stock. You
But
don't
isn't
want
that
the price.
really
Yeah.
detrimental to existing stockholders?
How is it detrimental?
Because explain this for me. This is why I want your take on it. If a share is valued at for around 420 right now, what's the fair price for those who are already holding private shares?
Well,
For
that's not an
when
issue. I
it's
mean, you can split the stock.
okay.
If you want, if your target is, if you're happy to issue stock at $420 a share, that's kind of unusual, but okay, maybe. You can issue it at $420, but you're going to have far fewer people are going to be buying,
Mm-hmm.
relatively small bundles, and institutions are not crazy about that. But okay, that's fine. It's just math. If you simply split the stock 4 ways and then you issue new shares, that's the same thing, or 5 ways for that matter.
Mm-hmm. Mm-hmm.
So, that's fine. And look, every share owner at $420 would be more than happy to take 5 shares at $84 or 10 shares at $42.
42. Yeah.
Macht nicht.
Yeah.
It's the same thing. So,
Yeah.
yeah, I don't think that's an issue.
Okay.
Companies have gone public and issued. I mean, famously, we had who was it? Who had the 10,000? I think even $100,000 share. I think that was Berkshire. Berkshire had a share that was in the tens of thousands of dollars. The A shares. I think subsequently they did split it, but at one point they were, in the tens of thousands of dollars.
Yeah.
It's possible.
But then that's again the reason why Tesla and Apple and others have had stock splits, so that it's more accessible to retail investors and not just to.
It's not only retail investors, it's also institutions. It's very hard to manage, allocations, and so they like to have percentages, and when those percentages, when you got a share price that's very high, it's very difficult to manage that, I think. And also, you know what? Anybody who invests into a lot of stocks and so on, they do the math in their head. It's so much easier to do the math in the head if all shares are priced in and around the $50 to $100 mark. Once you start getting into the thousands, it becomes quite difficult not quite difficult, it becomes less than normal, if you like. Mm-hmm. So, yeah, I mean, you buy stock in the 100 count lots, and you buy options in the 100 count lots. So once you get into the thousands and tens of thousands, it becomes difficult.
How do you see the SPARC offer that Bill Ackman has made when you look at Elon's decision on who to go with for the IPO? Is it a bargaining chip? Is it a viable option? It's not happening.
Bill Ackman responded to my tweet about about not doing a deal with a Texas-based company to say that his SPARC company goes away in the transaction and the ultimate company is going to be a Texas-based company. And I replied, yeah, that may be, but it is definitely a leverage point, that the transaction starts in Delaware, and a court case is going to definitely delay and throw a spanner in that works. And so I think it's a non-starter. Elon seemed to indicate that it was a non-starter because not because it was too complicated, but because it was a shortcut.
He did say, right, that he did post saying there's no need for shortcuts. But was it in reference to this in particular or something else, you think?
We don't know. I mean, he posted that directly in response to CERN Bash's idea of merging with a communications company from whom SpaceX had bought a lot of bandwidth, and having bought that for billions of dollars, part of the payment price was in stock.
Yeah,
and that
was
stock,
EchoStar, right?
That's right. So, but it's it's really a random communications company. I say random because they exist really largely through their asset base is largely their communication bandwidth, because their satellite business is not doing. It's out of business. It's not out of business, but it's not.
Which is why they had to surrender their bandwidth.
Yeah, well, not surrender. They sold it for
They sold it,
boatload of money
of SpaceX and a lot of money.
Yeah. They did very well out of it. Now they're a large portion of
their stock has gone up by about $40 in the past couple months since that has happened. So that would have been a good deal.
Right. And so soon, it was an interesting point, but that was definitely a shortcut, but it's almost certainly not a great idea, because it was, it really dilutes Elon's control.
Yeah.
The beauty about the SPARC deal is that it is totally non-dilutive of Elon's share, and it's completely in Elon's control. It factors out all the great banks, all the investment banks. It is a deal that literally could be done without an investment bank. It could also be done with an investment bank, adding, a layer of cost, but also perhaps adding a layer of due diligence. Bill Ackman undertook to do the due diligence himself as an uninterested party in SpaceX, which makes sense. There was a lot of heat on X. People don't like Bill Ackman for whatever reason.
Yeah.
I happen to like the guy a lot.
As one of their own.
Yeah, because he's not an investor in Tesla. I think that's a good thing. I think it's a great thing. I mean, he's completely objective when it comes to Tesla. If anything, he's slightly opposed to Tesla because he's an investor in Uber, which is theoretically, although I don't think it is, a competitor to Tesla in the robotaxi world. Yeah, so probably not. So all I'm trying to say is that their objections against Bill Ackman stem from this misguided idea that he's somehow not an acolyte, not a true believer, blah, 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 in Tesla. I think some of it is anti-Semitic, frankly. Some is outwardly anti-Semitic, because Bill Ackman is famously, Zionist and Jewish. And then there's just this general, sort of skepticism of financial mechanics and so on. And so,
but on the flip side, he is, as part of that deal, offering to buy $4 billion worth of SpaceX stock. So he's putting skin in the game.
There was this misunderstanding, which CERN Basher actually mentioned, which surprised me, that he was going to get some special deal out of it. I had read the prospectus, all 80 some pages, actually over 100 pages if you include some of the other documentation. And it specifically says in the documentation that it's going to be at the same price as everybody else gets. No value add.
To be able to invest $4 billion worth.
That's right. And he offered, didn't stipulate, but he offered to do the due diligence. And I'm assuming they would get a fee for that. Right. Whether he'd do it for free or not. I mean, doing it for free is not a non-starter if it's going to be a true independent due diligence. So he offered to do the due diligence. The deal wasn't subject to him doing the due diligence. My only objection to the entire process was Delaware, and he tried to minimize that as a risk, but it's a true risk. It would be possible, not easy, but possible to move it to Texas. And I say not easy because it's a very complicated, concept. In practice, it's also complicated. As I've said, there's hundreds of pages of legal documentation because this was originally a SPAC and then it changed into what he now calls a SPARC. But it's an interesting concept and a good concept. But anyway, it's not acceptable to the Musk world, apparently, or at least to a large portion of the Musk world.
Yeah.
So
there are a lot of skeptics, and some more reasonable, some less. But let's get to the point that everybody in the Tesla retail investor community is dying to know, which is how do we get what Elon promised years back? Some sort of a deal for Tesla shareholders who stood by him through thick and thin.
It's a difficult undertaking, and you will please nobody. Well, let me rephrase that. That's not true. You will displease most people. Because, I give the example of my friend Randy Kirk. Randy is a very long-time Tesla holder, but he got really spooked earlier this year and sold his stock for like 3 days and then bought back in at a higher price.
Yeah, I've done the same too. I think around the same time, and it was because of Elon's spat with Trump.
Yeah. So if you take the average Tesla investor, the average Tesla retail investor, you're going to find that kind of gap.
Yeah.
You're going to find...
Which does not make us unbelievers, right? Which we continue to believe.
In some people's light, it does.
Yeah.
And that's the problem. You're not going to please everybody.
Exactly.
You're going to say everybody has held the shares for 5 years. What about the guy who's held the shares for 4 years and 6 months?
Yeah.
Or 4 years and 9 months?
Yeah.
And it's not one person. It's many, many lads and ladies. So,
I personally think that if you have proof that you voted for Elon for the compensation plan, that you did what was necessary, you proved your allegiance, you proved your loyalty. So maybe that could be one of the things that could be taken into consideration in the eventual decision.
Which vote? The first vote or the second vote?
Yeah.
Or has it got to be 2 votes?
Yeah. Right, you're right.
I mean, and now you're getting to a really difficult point because you're starting to pass levels of not only commitment, not only loyalty, but then also, technical issues. What about all the guys who live overseas and were unable to vote?
Unable to vote, that's right. I'm lucky. I was able to vote, but there are so many others who could not across Europe and other parts of the world.
Well, all my holdings are with Schwab, and Schwab are extremely diligent about alerting you to, all corporate actions and making it possible for you to act accordingly. And so I was lucky. I was able to vote in all the years that I've been, with Tesla, because I'm diligent about that stuff. But not many people are. So you're going to handicap retail shareholders because they're functioning retail shareholders. I think personally, I think it's those who hold shares on the day the deal is done, because here's the issue. Many retail shareholders need the cash for various reasons. And once the announcement is made, before the date of record, they have the opportunity to cash in. And if there's a discriminatory clause about they have to be this long or they have to have this many shares or whatever it is, they lose that value at the moment they need the money.
Yeah.
So
it's like a stock split, right? There's a day on which it's decided if you hold shares on that day, you're eligible for it, right? I think that's fair.
And the value of the SpaceX issue will be reflected in the Tesla stock for whatever the award that SpaceX makes towards the Tesla shareholders. But if it's a discriminatory award, it will not be reflected in the Tesla stock. So it's in everybody's best interest for it to be automatic to all the Tesla shareholders. And then the question is, what is a institutional shareholder versus a retail shareholder? For example, my shares are held in a trust. Does that trust make me not a retail shareholder?
Right.
Family offices, they hold those shares in trust.
Yeah.
Right? So is a family office not a retail shareholder? What about the guy who's trust for his kids?
Yeah.
This whole thing it becomes really, really, really difficult and can give rise to all kinds of legal issues.
Yeah. And a lot of bad blood, a lot of dissatisfaction, a lot of criticism.
Yeah.
It's just
whatever
pointless.
decision they make is going to be reamed.
So you feel the cleanest is to just set a date and everybody who holds Tesla shares on that day should be eligible to get what? What is it that you feel is the best way for Elon to reward Tesla shareholders?
I think that, there could be a simple, straightforward formula of an allocation. So let's assume they're going to issue, X many shares. They could issue 1/3 X to existing Tesla shareholders that subscribe, up to 1/3 for all Tesla shareholders that subscribe. And then the subscriptions will be, will be allocated on a pari passu equal basis. So if they're 10 times oversubscribed, you'll get 1/10 of the request.
And this would be what, a warrant that you can then trade or purchase?
Or a direct share listing.
Or a direct share,
yeah, I mean,
because I'm sure there'd be so many retail Tesla shareholders who would want to own both Tesla and SpaceX and might not have the funds to allocate for both, and then might have to sell off some Tesla in order to buy some SpaceX.
Correct. Yeah, the value of the warrant. Look, the value of a warrant is really great because it gives you time to actually decide whether you're going to take up the share or whether you're going to sell the warrant. Allows you to, realize the full value without having to upfront the money. So if they were to issue a warrant I don't know, 3 months before the listing or 6 weeks before the listing, in the ratio of 1 warrant for every 6,000 shares or X thousand shares or whatever it is. And maybe that is, you have to have a cutoff. You have to have at least 1,000 shares or something like that.
Mm-hmm.
On the date of record, which is the date they issue the warrant. So you won't know until the warrants. So that kind of encompasses the ownership of the shares. That may be a mechanism, that may be a mechanism that gives every warrant holder X amount of time to do it. And you could always make that warrant realizable after the actual listing. Typically, it's realizable after the listing. So, and that's the machinery, the mechanism that Bill Ackman has, makes that very, very malleable, very easy to implement. So you'd have to have that warrant release somehow.
Right.
And in fact, that may be the first step in the listing.
Okay. Irrespective of whether it's Ackman's SPARC or whether it's a regular IPO through any other bank, like a Morgan Stanley or something.
Yeah.
Okay.
I think it's independent of that issue. It adds complexity to the listing, by the way, quite significant.
It does. It does.
Yeah.
Which was going to be my next question. How is that going to complicate matters for SpaceX? Because has there been, I don't know of any other example of this. Do you know of any other?
Every SPAC has that mechanism.
No, I mean to existing shareholders of a different company.
Of a different company?
Yeah.
It's a good question. I do recall, this is going back to South Africa. It was a company called Lonro. It was on the British Stock Exchange. Did warrants. They were a mining company, and they did warrants in one of their acquisitions. That's what I do recall. But I can't recall a US company doing that.
There have been share swaps when companies have been taken over by others, right?
A lot of that, yeah.
Yeah, but to the best of my knowledge, I don't know of shareholders of company A being rewarded with warrants for company B in America, unless there's been something.
Another way to do it is for SpaceX, for Tesla to buy a bunch of SpaceX stock.
Yeah, which is what we've discussed with you in the past on the channel.
Well, no, and that was for the purpose of acquiring control or complementary control.
Yeah.
But they could buy stock and then issue that stock to their shareholders on a formula. That's another way to do it without warrants being involved.
Could you dwell a bit more on that and explain your thoughts?
Well, I'm just developing the ideas. We can discuss this development as it occurs.
Sure.
So if Tesla were to issue to Tesla at a price to be, that the investment banker can perhaps determine, a million shares, X number of shares at a price. Then Tesla could, can have as an offer to their shareholders, a sale of that stock at a certain price, and they can set it based upon a right that they give everybody with a certain number of shares, a minimum of 100 shares and a maximum of X number of shares, 1 in 10 or 1 in 100 or 1 in whatever shares of SpaceX for a share in Tesla. That's a little kludgy. I'd have to think it through, and it certainly would not be
would Tesla
much
need
of
to
a
raise money for that, or would existing cash in books be used for that?
I think an existing cash, no, they would use cash on hand to do the deal because they would be getting back cash from their shareholders. So they'll be acting as an underwriter in that case. I mean, within the actual listing, they could buy X number of shares, $20 billion worth of the stock. And then they could parcel that 20 billion out to their shareholders in due course, and say to their shareholders, "We're going to buy $20 billion, and we're going to parcel it out, one SpaceX share for every 330 shares you own in Tesla." That's a possibility.
Interesting. Yeah,
none of the stuff is orthodox. That's the value of the SPARC project, that it makes it possible within the SPARC mechanism to do that, because it's functionally you're buying warrants in a SPARC.
Yeah.
And those warrants are tradable. And so those warrants could represent X number of SPARC stock and of SpaceX stock. And you can then use those warrants or offer to exchange those warrants for Tesla stock or so on.
Right. Do you still think there's time for Ackman to move the SPARC to Texas and then for it to go ahead, or is that completely?
Oh yeah. Okay. I mean, our information is that SpaceX is planning a mid-year project. There's plenty. There's at least 3 months. Look, Ackman's talking about announcing a deal in mid-March. So if we're moving that back to mid-June, they could move all the work back at least 3 months, and there's enough time in 3 months to do it. Yeah.
Right.
I would imagine. I mean, I could be wrong.
Yeah.
I could be wrong on everything I've said up to date in relation to this whole SpaceX project, because we have no knowledge. None.
Yeah.
We're guessing. And our guess is based upon all the rumors we've heard to date.
Yeah. There's a certain amount of speculation that you have to do. But of course, there are also educated guesses, right, that you can take. Informed guesses, shall we say, based upon your experience and your knowledge, your firsthand, the community knowledge, Elon's track record. It's not just a shot in the dark.
Look, Aramco, Saudi Arabia Aramco, went public. It was the largest public issue. At its time, they raised $20 or $30 billion. $29 billion, yeah. SpaceX talking about raising significantly north of that.
25.6, yes.
There you go, yeah. I knew it was somewhere between 20 and 30. I looked it up the other day, actually. I should have known. But they paid their investment bankers for all the services from start to finish in the range of $250 million.
Wow.
And they had a lot. That's money. I mean, even in a $1 trillion valuation, that's out of pocket. That's a lot of money.
Yeah.
So it's like 1% or a little bit less than 1% of the money they raised. And, some people say, well, they only paid $50 million. Yeah, that's what they paid in fees to their investment banker. But that's just one layer of this multi-layer cake that they had to shell out money for. And so at the bottom line is, when you think about 1% of 40 billion, 50 billion, whatever it is SpaceX is going to raise, that is $500 million.
Yeah,
So
it's not pocket change.
Bill Ackman has a point.
Yeah,
I mean, he's talking about, at most in the tens of millions of dollars of legal fees. And he's not charging anything. I think he would have to charge a due diligence fee. He would have to, because he'd have to become, completely independent. And whether he does the due diligence or they get a third party to do the due diligence, it's entirely, I mean, the amount of money that would have to be paid is negligible compared to underwriting fees or investment banking fees.
right.
So there is that to be considered. Unfortunately, there's a reputational issue. And so there's always going to be that number of people who don't like, quote unquote, don't like Bill Ackman. Well, that's true. I mean, there's no getting around it.
Yeah.
So I suspect Elon's not going to do that.
Sorry, say that again. You suspect Elon?
I suspect Elon is not going to do that.
Okay.
By the way, I do predict one thing.
Go on.
I do predict Elon is going to take somewhere between $10 and $20 billion out of this transaction for his own pocket.
Okay. And that you think is to pay off taxes, or?
Partially to pay off, partially to actually create a tax liability, and partially to lighten the load of debt and to give him a little bit of wiggle room.
Right. Okay.
That's what I
That's
think.
interesting. Yeah. Well, we'll have to wait and see how that pans out. But thank you, Larry.
Yeah.
Thank you so much for your
Thank you.
time and for allowing me to pick your brain. I look forward to the next. And I think we could tell our audience that in 2026, we'll be talking every Wednesday.
Yep.
And hopefully on other topics as well, as and when they come up. But I'm really looking forward to the next year. It's going to be a crazy 2026. So much.
Thanks, Wade. Much appreciated.